So just give me a few seconds. I'm just about to do an internet speed test and then just want to see how the quality is going to be. It seems like it's kind of being weird now. Okay, it seems like it's going to be okay. Um, so today this is going to be the trade review for Tuesday, January 13th, 2026. And so the couple things I want to focus on first, just to start the call, I mean, is, you know, preservation of capital is really key, and then understanding when they draw on the higher time frame liquidity. So I think me coming to YouTube and trading live and just trying to make sure everything's like working the right way had me kind of like antsy a little bit to take some setups, but I'll go over some of the things that we're really looking for when it comes to point of interest, and then you know, like I said, what they ended up doing in the very beginning by going above that 26,000 whole level and then delivering up to that 26,000 whole level and then falling back to the low of day, and then how to look for that buy a little bit better, because I think any buys before then, which I believe I took a setup somewhere back when they returned back to the news, and that was just not a high quality setup. So let's look at this. This is for obviously OmniProfit Capital community, but also just for myself. You know, I do personal trade reviews regardless every day. So yeah. And so let's go over the small time frames, right? The New York Open. All right, so I just want to make sure everything is loading the right way. Let me look down here. It looks pretty clear, so I'm gonna move this out of the way. Now, when I was taking setups today, I was looking at like 15.5 because a lot of the times when you're looking at that 15.5, you're gonna find a lot of good edge, and then I'm looking for specific candle closures in those areas. But if you run it back to how New York opened, they actually ran down. I never take a trade usually in the first minute, because the first minute is just pretty much asking for chop. And honestly, in the first 30 minutes, so until like 9 a.m. Central Time Zone, a lot of times you're going to find a lot of chop and a lot of manipulation. And so if you're going to take a setup like that, you definitely want to have edge, and you definitely want to be protected, I would say, on the setup. But coming out the gate, just looking at this replay here, I don't know where it says I have it to start new. This is what we've seen in the first minute, right? Price just kind of went down, took out any like early players, or I'd say small time players, right, that are playing small time price action, and took them out in that first minute, and then started to build. Now, something like this I like, right, because you have a draw on liquidity, and you have an imbalance fill, previous support resistance being tapped, etc. And I would like to frame something like this up. So I believe what I ended up doing was I ended up looking at an area to come back into the New York Open. So I was looking at something like this to come back into this candle. Now the risk, when I'm thinking risk to entry, I wanted it to come back into like somewhere like here. And this is where thinking and probabilities comes hand in hand, because a lot of the setups I like to take, I don't want to risk more than 20 handles, so 20 points on an NQ trade to get 60, which is a 1 to 3, right? And price did deliver an R multiple today. Now, even though it didn't go, if you're looking left here, even though it didn't deliver the target that I essentially wanted, was that 100-point move, right, up into the 26,052s or 50s, let's just say, it still did deliver a 1 to 3. So when you go to that next candle here, and I like to see like signs of strength, and then what's called an NCE, so a next candle entry. And so price comes down right back into New York Open in that 831 to 832, giving you a chance to believe set up your risk here, and then decided to fly from there. So I would say today one of the biggest things is like having your risk on edge is going to be key, but also for me, because it's going to be different for each trader, but maybe you're close to a payout, maybe you're close to passing a combine, maybe you're close to blowing your account, who knows, right? But for me personally, I was managing risk with smaller volume. Give me 1 second. We have a crazy trash truck coming late today. Um, but I was managing risk with smaller volume, and so sometimes what happens with when I do that is I take way more setups than I need to, and going forward, like when we come back and we trade live on Friday, I'll probably size up into the trades a little bit more so that I can respect my 20-point risk and looking for my specific criteria to enter the trade. And so right here, I felt like this was a really good setup to start, even though it was like on a 1 minute. And then you immediately got a sign of strength off that 25,950 level, and then price then shifted in price delivery on the 1 minute here, and then you're really just looking for that break of structure, right? So basically just line graph price here when you're looking at it, just to break above this area to be able to cover a position. So price comes up, right? You're still bullish here. Price goes again here, right? Still not breaking that structure yet, and then anybody that went break even too fast or trailed their risk before they got the break of structure got stopped out, and then they go ahead and they do it, looks like again, and then bam, this is where you get a down candle in the uptrending market, and you have two options. You can either trail your risk to that low of 25,000, let's just say 967s, or what you do here is you can go break even on the setup. And I do believe that we did manage the trade. I'd have to look back at the actual recording of the whole thing. But like right here in this situation, you definitely could be risk off. Now, this is what I was saying about, using like, I'm trading across 5 XFAs, but let's just say like we're focused on that one XFA, right? And so when you're looking at a situation like this, one of the things that you really want to realize is like your sizing, right? When I go back and I look back at my own personal stuff today, instead of just taking unnecessary trades, I need to get back into that mode of, 20-point risk, 60-point gain, no matter what, and then sizing into it with, at minimum, 5 contracts, right? So 5 contracts on micro NQ is going to be a $10 per point per move, right? So even if you see this setup here, and you went break even, right? And you were looking for at least a 1 to 3, and you were looking for this to go to, like I said, just to take out that current high of day. At this situation right here, you have 2 options on trailed risk, right? And I'll go over this over time and as we continue to do sessions. But if you wanted to be break even, you could. If you had down candle uptrending market, you could also go there. But if I had the proper sizing on, right, then I probably am going to go ahead and trail that risk up to here, because what that's going to do is you're getting in let's say the 950s, 955s, and then you're pushing price from the, and this is like just saying it's not like super perfect or something. So like 955s here, and you're getting up to here, right? Well, I like the number 66. So 67, 73, right? On a $10 a move, that's gonna, that's gonna be about what, $700, right? And so what you're doing essentially right here is trailing off $500, right, on that 150k XFA by doing 5 contracts, right? So I'd say the biggest thing that I learned today, and I'll bring up the documents if you're not in the free Telegram chat with OmniProfit Capital, where I have the documents to basically, for your weekly reviews, your daily reviews, where you answer specific criteria questions. Then I will just DM me, and I'll send it to you, or it'll be in the Discord here soon. And so, like I said, I think the move, one of the other biggest things I'd say I learned today is that I'm spending a little bit too much time looking for or being on the charts, right? Like, been doing this long enough, me personally, to find some moves like this, like I'm showing you guys right here, and just need to size a little bit better into that move no matter what, and keep myself honest to those rules, okay? And so, not perfect, just that's why I'm here right now. I'm just cooking up and making sure I stay on point. But I do think that when you really think about the very beginning of that New York Open, and if you are playing that opening range, is, are you thinking in R multiples? So I've got some things really quick I'm going to be writing down as I'm telling you guys, because that's how I'm able to flow as I'm like explaining and showing things here, and then I'm able to take those notes myself. So if you are here live and in the future and you have any questions, just go ahead and drop it in the chat, because that way I can be a little bit more interactive. Obviously, we both can learn, and there may be some things that you're seeing that I'm just not seeing today, and let's get better. But really quickly, like I said, I'm going to go and take some notes on what I just said. So, are you thinking... And one of the main things I say, like a setup like this, being in those first, 15 minutes of New York, right? Even though we didn't get that high delivered, is if you're positive on your account, right? This also applies if you're negative on your account. Thinking in R multiples is what's really gonna help the trader stay true to their edge, right? And so you really want to push away from P&L or what you expect to happen, because the market is going off of people's philosophy and mindset to a point to where you're not going to be smarter than the markets and the market makers. So you've got to, what I have right here on my desk is pay yourself as the market makes money available and act on your edge without reservation or hesitation. Okay. And so set up. So that's pretty much what I was seeing for that. And then let's just say you moved your risk hypothetically here, as we're seeing it here, right, to this to this area right here, which would have been this low, exactly to that low, which would have been securing you about, like I said, $500 or 500 or 50 points, whatever it would be for your account. And then if the price does fall over like it does, right, on this next I believe candle coming up. So now this is another thing. As a 5-minute bar closes, higher open, higher close, and then this one, higher open, higher close, what you're able to do as soon as that bar closes is trail that risk up a little bit more, right? And now you're starting to see, like I'm saying, you could really be in and out of the markets pretty quickly. Like you don't need to be there super long. And so like you had secured 53 points times whatever your volume is, let's say 5 contracts for just $10 a point. That's going to be $500, right, that you secured. Now you've seen higher open, higher close through that 26,020 level. And now you're seeing price potentially go for the high of day. But as soon as that 5-minute bar opens, what you could do is go ahead and trail that risk up to right here, securing 63 points on the day, right? And, even if you don't get through your TP, if it comes down like this, right, bam, you're out for the day. Go do what you want to do. Awesome. You know what I mean? So I think that's really where my mindset's going to be. Like when we come back to trading live, which I don't know if I'm going to trade live tomorrow. I might just wait till Wednesday because I'm going to be watching some tape and just looking at some stuff to kind of review different things. But that's something that I personally seen from the trade I actually took this morning. So when you go back and you look at this too, and you look at that first 15 minutes, this is pretty much what we were seeing. Start new. Right, this is all we could really see inside that 15 minute from 8:30 to 8:45 was price was closing higher on the bodies, but it was leaving wick tails. Now the other thing I would say that was very key to today's setup, so I can barely talk, I just got back from the gym, was before the session even started, right? So I'm gonna move some of this stuff here. Before the session even started, price, right, inside of a daily demand or daily supply, right, which is where you're more than likely going to see more sell side. So I'm basically where I'm focused on, right, is you're going to see more, even though I want this target, right, I've been talking about 26,100 for I don't know how many days, right, but even though, right, we want that level, you're going to anticipate some reactions in this level. And so coming into New York, what I would say one of the keys was for today was that at 7 to 8 a.m. they had already drawn on liquidity, right? And so that's something I just got to make sure and identify. They had already drawn on that liquidity. And so now you already have buyers from the overnight, right? So that London session, London low was right here, the low of day was here. You already had individuals who had bought from, let's just say 25,900 to up to 26,000 whole level, and they had taken profit as well. And so the likelihood of this buy playing out, when I actually go back and look at it with the imbalance that was here, so something like this wasn't very likely. It should have been a lot better to wait with the mindset of the 7:30 news that came out, right? Because 7:30 news, you got to ask yourself, where are these individuals placing their risk? So they're placing their risk here, they're placing their risk here, and most people, right, are giving themselves low of day risk if they have enough space on their account. So it just depends on where the people are going to place their risk. But I would say, like, after that started to break down, then that was kind of the sign, like, okay, they're going to come for London low and that low of day and fill the imbalance before going higher. And so, like, these are my favorite type of setups too, is to see the draw on liquidity and then let price break down to the Asian low and then look for short covering, okay? And so, like, for example, what is short covering, right? Well, like I said, individuals at 7 a.m. right here, 7 to 8 a.m., they ended up having their limits set. So, like, let's just say you had a buy position and you had your limit set right here. As soon as it delivered, things simultaneously are happening in the market. So what's happening is, let's just say, like, people had bought overnight, their TPs had hit, and then what you're seeing here as well is, like, when people start to short a market, right, they're looking for London low, they're looking for, Asian low, Tokyo low, whatever you want to call it. And what they're doing is they're placing limits, right? They're TPs essentially, right? And when those TPs trigger, that's when you're seeing the transition of orders changing, right? That's when you're seeing those limits hit, right? And the sells are taking profit. Those are sometimes some of the best buy positions, okay? And so those are my favorite type of setups, is when price capitulates, takes the low of day, and then you see a bounce play, right? And so when you go and you look after that buy failed in the high end of the area, right, you want to wait until they go, like, those sells are in a really good spot to be able to take profit, because you want to be buying a position at the same time of that sell side move taking profit, okay? And so it's easier said than done, like I said, right? Like, I'm not saying I'm perfect. I'm just saying, like, reviewing this is what I was noticing. And so I thought the play of the day also was when that happened, okay? And that's kind of what I'm going to go over to kind of finish up this call. And then I'll talk about what we're expecting for tomorrow, because higher time frame is still respecting the levels that I had went over in the pre-market, okay? And so I'm not going to talk about the S&T divergences or anything like that. Most importantly, what I'm going to talk about is just the signs of short covering. And so for me, the best trades happen in the first 15 minutes of the hour and the last 15 minutes of the hour. So if you want to be a little bit more precise with your setups, then you can just condense all your setups down to the first 15 and last 15. If you don't see your signal or see what you're looking for your criteria, then just don't take the trade. All right. And so for me, this was perfect, right? 9:45 to 9:50, boom, 5-minute dump candle. And then they drew on that 1-minute price. Now, when I position a trade, I like to have my risk with the new current, like if I'm going to buy a position, I like to have my risk with the new current low of day. And so as you can see here, we had taken that low of day, right? And so now what I'm trying to do is frame up 20-point risk for a 60-point gain, right? And so when you've seen this draw on liquidity on the 1 minute and price starts to run up, here's what some of my criteria of trades when I'm looking at 15 5-minute 1-minute setups. When I take a setup, I want that setup's location to be in alignment with the 5-minute dump candle, right? So if I'm already knowing that I'm going to use this as my risk, I don't want to have to I don't want the entry to be basically here. So let's just say I'm looking for the bounce back up to New York price. I don't want my entry though, right, to be anywhere outside of, and I'll circle it here really quick. I don't want it to be anywhere outside of this 5-minute area, okay? Anywhere outside of that area, and I'll kind of show you guys, I've plotted lots of positions to kind of see how this works. Anywhere that was down in here, so if it's stretching, great, right? After it took that liquidity under old lows and you bought it, let's just say hypothetically right there, that's a good trade. That's going to be able to present to you what I'm talking about, which is 20-point risk for 20-point risk for 60+ point gains or more, right? But if you take that trade a little bit up in here, now you're putting yourself at risk, and that's why if you look right here at 10:25 to 10:30, it comes back and takes those players out because they bought the 5-minute expansion. They're not inside demand, right? And this has happened to me so many times, okay? And so now where I personally made a noob mistake today, because I'm showing you guys the area I really wanted, but I just kind of hesitated that area. But the new mistake that I made personally today was because I missed my 5-minute SMT play, is I tried to attempt to play the stack. So price closed 950 to 950 to 955. Then we had another sign of strength here, and then price kind of was showing a little bit of weakness and then closed higher. That NCE, I tried to play this area. So basically I tried to play this like this. All right. With a risk like that, 20 handle risk, right? I mean, that fits my game, so I'm going to accept a loss on a situation like that. And I was still trying to play up to where we originally got to, but you can't anticipate a fast spike down. But what you can anticipate is your location of your trades, right? And that location was just straight shit, right? So I deserve to get clapped in that situation, in my eyes. And so just showing you guys, like, that's the difference. And when you go back, if you're gonna do anything, go back and like plot your position and then have an understanding of supply demand. But this was just a shit entry. Now because I have understanding of confluence of what I was wanting to see, let me go over to the 5-minute to kind of see that too. Now I want to show you guys kind of like what I was saying on a 15.5. You're gonna be able to see, like, if you took that inside that 5-minute area, as you can see, you're still good inside that 15-minute demand. And one of the main things I would say too when you're taking a trade like that is you want to have, I have key level marked here, but what you want to have marked is the low of day, right? Because that low of day, what I tell myself personally is I want to be buying under old lows. I don't want to be waiting until after price is already closing back inside IB, and IB just stands for initial balance, for me to take the trade, because I'm more likely to get clapped, right? And so let me go back to here, New York low, or this was the low of day. So low of day and IB low are essentially the same thing for me. So where's that low of day? Low of day, low of day. Okay. And so now, as you can see here, if you were to take that trade where I said, and you waited a little bit longer, right? Now you're outside of the 15-minute demand, and right, what's more important is you're actually back inside the IB, which is not below the old lows. You're not going to have the best risk reward or slash edge on a situation like that. There's just, you're going to be putting your risk no matter what inside of an imbalance or inside of an area where it can get spiked like that. Now, the other move that I did take that was actually pretty valid, that we ended up taking at the end of the day, that ended up still extending for about 100 points, was seen here on the 1 minute. And the timing of this was at around that 10:30 time, which was that London close. That's when the London close happens. And so they spiked out everyone, right? They filled the imbalance. So let's just kind of show this here. All right, this was the imbalance right here. They spiked out everyone, and then this was 10:30 to 10:35. Now for me, as soon as they kind of set a demand, 10:28 to 10:29, this candle printed, and then we had this candle kind of printing back down into the area. What I essentially did was I ended up taking a position like this, right, off of that whole level, 25,900, and then I condensed that risk to what I wanted, which was right around here. And I ended up I had about a 15 handle risk. It was about 16 to 17 points, somewhere in there. So I entered like right there around 10:30, and it was a little bit less than 20 points. And then I was looking for the same thing, price to reach back up into, let me see here. I was looking for price from this area here, right, 25,900, to reach back up into this supply candle and 26,000 whole level again, and then potentially, right, again, break through that high of day. And so what we ended up getting was price ran all the way up. I ended up trailing risk based on, because we were watching other things on the overall comparative strength analysis. and was able to, you know, trail my risk up to like the 990s, I believe it was, somewhere around that area, like 995s, I guess. Yeah. So, and then price fell over. Price ended up falling over going into my execution window time closing. So I like to trade from 8:30 a.m. to around 11:15 a.m. If I haven't found a move in that situation, usually it's not, you know, there's been plenty of opportunities already in the day. And so that's something else you guys will see as we go forward. Like, I'm going to be shutting it down a lot earlier. If we find the move, that's going to come down to the sizing and just going back into the mode. But if I find a move fairly early and it works out, and you know, cool, because less time in the markets is going to be less chances for you to just make wrong decisions or make emotional decisions, right? Or have FOMO, right? But I thought that this was a pretty good setup, even though that they had taken that liquidity, right, and filled that imbalance so quickly and just really shocked people. I still felt like that was a pretty good setup to go to the upside. So, yeah. And so, I mean, you could also, you know, beg to differ that the sell side was really good here. Me personally, because I wanted that target of 26,050 half level and 060s. I personally wouldn't have wanted to short this position right here. But one thing I will say is it did meet the criteria of timing a lot better. Okay. And so when you look at how this 15-minute candle closed, if you go to a line graph, you can kind of see like it definitely went up there and obviously took some people for their money. But one thing you can notice about 10:45 to 11 is you got a higher open, higher close on the 15, right? And then that, like I was talking about on stream, the 5-minute bodies were closing higher. But if we weren't getting the delivery of that liquidity grab of those highs, you could easily see price break down. And this is because of a thing that I always talk about, which is noobs buy tops and sell bottoms, right? So you got to understand what's low and what's high. And what most people are doing in these situations, right, is they're buying, like we bought in here, which I thought was pretty good. It's below daily open, it's below market open, and it's below New York. So it's below point of interest. But what some people are, and most likely most people are doing, is they're buying right here trying to push this price. Or what they're doing is they're seeing it come close to the top and they're like, shit, I don't want to miss this, and I've done this thousands of times to myself, and then they're trying to push this through the target, right? And that's where I'm saying noobs buy tops and sell bottoms. And at that break of structure, when they actually broke here and closed the body, you want to just be trailing risk in a situation like that. Like that sign right there for me, for my buy position, was for me to just trail my risk. So like when I took the 914s, like if you guys go back and watch the video, and I said you could use point of interest as your risk, as your trailed risk, and then when that body closed like this higher, and then price started to right here on that 5-minute fail, right? So we ended up getting a lower low close right in that area at that 26,020s. That alone to me was letting me know that they're not going to go deliver that price, and you just need to protect your trade. Now, the difference, like I could say today, that would make the trader feel a different way is the sizing that they use and the edge that they take. So every time you put your hand out there, so what I mean is like every time, doesn't matter if you're using $10 a point, you know, $2 a point, whatever size it is for you, you want to be thinking in probabilities and thinking with edge. And so essentially, like I said, you know, I'm looking for 20 for 60s and more, but like that's what I'm looking for price to move. And then when price goes a 1 to 2, right? So 20 for like 40, then I'm able to start managing that trade. And if it goes 20 for 60, great. And then if it goes more, like 20 for 100 and starts flying, then I start breaking that trade and start managing that trade on the way up, right? But that alone, I let that probability play out so that I can get the most from the trade. And so, yeah, that was pretty much what happened. We ended up taking a pretty good one, I thought, from the 900s up to the 26,000 whole level to close out the day. And then when individuals knew, like myself, or like individuals who bought under that low of day, when they knew they had their limits set there too. If you don't have trailing risk, then most people just wait for it to try to get to their target. And once those limits weren't going to deliver, that's when you start seeing those buyers pull their position and the sell side just overtakes the market, right? And so hope that kind of helps out with like the understanding of like some of the areas I was personally looking for. And then going into tomorrow, we'll go ahead and start breaking some of that stuff down as well. And let's see here. This is going to be, I just want to move this to the future for tomorrow. What news do we have? Let's see here. Whoa, tomorrow's core PPI at 7:30, so they're gonna body a lot of people very early. I personally don't like to play like 7:30 news, right? Because I'm looking for just I call it traditional markets, right, where I can find that edge, right? And when it's going crazy like that, you're more than likely gonna get clapped. So let's see here. So going into tomorrow. All right, I still see this area as very valid, right? Because we've failed to close bodies. Like when you look at a line graph, we failed to close bodies higher to show signs of strength. So I could see us roll back over into this type of area, and then we'll look at a 1 hour, 4 hour here. Take these off right here, and so this is where I'm focused when it comes to a 1 hour area for this part of the week, right? But also this candle really has my attention, right, on an H4. So I'm going to take this off. So like this whole area right here, right, until the end of the day tomorrow, it really has my attention, because if we can come down below the previous day low, right, which would have been here, like the 25,800s, then we might see reaccumulation tomorrow inside 25,700 to then continue higher to our target, which is those quadruple tops, right? And so as long as we can stay bullish and bodies close a specific way, it's more than likely that we could do that. But right, on the flip side of all that, some areas that I'm also still looking for when it comes to the market open, which the market open is here. All right, we'll just go ahead and do this on all of them. All right, so this from this red line on, right? Let's just do green so we have like an understanding of the start to finish. Do it over here. Okay, so from this green line, right, and you're looking at like, I'm gonna turn this here. Let me make sure you guys can see it okay. Okay, so from this green line over, right, is the market open. And so this is all part of last week's liquidity. So if price fails to, hold inside this area, 25,750, 25,700s, then we could see price go for those low resistance lows, right? So like prices like this could turn into liquidity from last week, right? Buyers liquidity, and then we'll be looking for anything below 50% of that area. But if you look at the weekly, the reason why I'm still pretty bullish on this whole thing is that we're respecting weekly demand. We're also respecting this daily candle really well. But like I said again, if price decides to fail, or we'll see what we get for overnight pricing as well, then we could see our way back down maybe into that 25,500s, and that would set up for me as a potential really good buy to then attack that higher time frame bias. Okay, and so let's see here. So yeah, going into tonight, I would personally look to see a move down that's going to go down into that 25,700 level, and hopefully overnight sells off one. So this would be 100 points here, so 100 points here to 200, and people are sitting 200 points in profit, because then again, that sets up a capitulation bounce play, right? Let's say right now in the market opens, people, immediately they just start selling this level and price falls back into this level. Well, they're going to be, every purple line here is 100 points. So 100 points in profit, 200 points in profit. And now what they're going to do is on that previous day low, which would be, or this low of the week so far, right? They're going to be setting limits, and they're going to be setting limits inside this candle most likely, right? And so if they're not going to get that break of structure lower, you're going to see price kind of get here. And then maybe by New York, we'll see that transition to then go back higher if they sell off the overnight. Okay. And so I don't predict things. I just wake up and then I see what I can get. But I will say, if you were live with me today, I was a little bit hesitant on just different stuff. But there's definitely things I'm going to clean up and just keep showing up, because I'm always going to show up. So Let's see here. But yeah, just in the comments or in the chat going forward, you know, because I know people will start falling into this as we continue to stay consistent. Just ask questions, you know. DM me if you follow me on Instagram. Currently, it's CirrocFX, CIRROCFX. But that will probably be changing here soon. But still, just DM me, or if you're in the free Telegram, you can always DM me on Telegram. But like I said, yeah, going into tomorrow, that's what I'm planning to see. And then we have those levels that we like, and we have some key levels for the overnight to watch. So I appreciate you guys watching the trade review. Let's continue to get better and better, and have a good rest of your night.